Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today I'm talking all about how to look at deals when you're seeing properties on portals or through agents or in auctions. How do you know whether it's a good deal or not? So that's what we're going to talk about today, and obviously there's so much in this topic, so I'm going to have to keep it relatively compact on each point, but obviously I go into a lot more detail on this with my clients because obviously this is a really important part of understanding commercial property and making successful investments. And just as a little plug, just before I get going, my boardroom is open at the moment. It will be open for a very limited period. We're almost full, but it only opens twice a year. It's small group mentoring where I can help people hold clients' hands through commercial property deals. So if you're interested, click the link below and take a look. So when you're given a deal, or when you see a deal on a property portal, or if you get sent a deal by an agent, where do you start in terms of understanding whether this is a good deal? So the very first place you need to look at, the very first place you need to start is an understanding of what makes a good deal for you. And so many people do this the other way around. So many people look at this and say, oh, let's look at the deal first. But I strongly recommend that you start with the end in mind. You work out what makes a good deal for you. That will be things like, what kind of return do you want? Also, more kind of esoteric type factors like how much time do you have? So, for example, do you need to do a development deal? If you can do some paper-based asset management strategy, do you have the time, the expertise, the money? Development, I've done a lot of development, and obviously it isn't without its complexities, it isn't without its risks. And so is that what you want to do? Do you want to manage a large serviced office, or do you want more hands-off, full repairing and insuring leases, hands-off income? So those kind of factors you need to look at. And also, do you want cash flow? Do you want profit, or do you want equity? Cash flow is basically like your salary, profit like your bonus, and equity is basically, like your pension. And you can invest across all three in commercial property. So you can buy deals for cash flow. Sometimes that they will fit into more than one box. You could buy deals for cash flow or profit, and they might actually be an equity play for the future as well, because obviously commercial is fantastic for this kind of financial fortress, kind of hands-off income that can provide a good pension. But development, for example, tends to be big lumps of money. And so they come in on an irregular basis, whereas cash flow comes in on a regular basis. And so what are you looking for? Are you looking for cash flow, or are you looking for lumps of profit? And I would strongly recommend, by the way, that if you haven't got that cash flow covered, that you don't go straight into getting big lumps of money coming in on an infrequent basis, because obviously that you live in feast or famine at that point. So work out whether it's a good deal for you. Do you want to invest close to home? Do you want to invest further away? What are you looking for? Some investors in commercial literally just want to park their money for yield. They want hands-off income, full repairing, insuring lease, blue chip tenants. They don't actually mind geographically where the property is. They just want to make sure that it's relatively risk-free, because they're paying quite a high price for it, because that asset management is done. So everybody's got different criteria. What is your criteria? Have a think about it, because it's very difficult to appraise commercial deals if you don't understand really what you're looking for. And what we don't ever want to be is a motivated purchaser with any type of property deal. So that's the first thing, work out whether it's a good deal for you. And then second, once you've worked that out, then you will kind of know what you're looking for. And then you want to niche your strategies. And definitely look back to the previous episode of this podcast where I talked about niching. Niching can not only save you a lot of time, but you can really start to get massive knowledge in a niche, which means that you can absolutely clean up in terms of deals. You can appraise deals much quicker. You know what the tenant demand is. You've already built the relationships and can continue to build relationships. So you want to be an inch wide and a mile deep, not a mile wide and an inch deep. That's the whole point of niching. So then when we look at a deal, say on a portal or an agent sends it to us, if we've got those two aspects in place, what am I looking for? Start with the end in mind. What's a good deal for me? And also, what's my niche? It obviously makes it a lot quicker to be able to appraise a deal because, you know whether it fits your criteria or not. And one of the secrets in business that I've learned through bitter experience, I have to say, is sometimes it's about the things you say no to more than the things you say yes to that kind of build your success. So, we need to be really careful that we're not scattergun investing with our commercial property strategies. So if we then get a deal sent to us, what are the actual practical steps that I go through when I'm looking at a deal? And I'm going to give you the exact steps that I go through and some of the tech that I use, the PropTech that I use, and some of the portals that I use, and the exact techniques that I use to appraise property deals. So let's assume that I see a property for sale on a portal. So obviously, first of all, I need to be looking on those portals. So the portals where a lot of commercial property deals are advertised are Property Link Estates Gazette. You've got LoopNet. You've got CoStar. If you are a subscriber to CoStar, you've got Rightmove Commercial, Zoopla Commercial. You've got auctions. You also have agents' websites. And don't forget agents' websites, because not all agents advertise on the big portals, because obviously they cost money. They have to have subscriptions. So sometimes agents just advertise properties on their own portal. And don't forget that a big chunk of commercial deals, especially in the south of England, will get done off market. So, make those relationships with commercial surveyors. So so what you need to be doing is you need to be putting alerts in place for your search criteria, again, so that we're not scattergun. We are being very specific in terms of what our actual criteria are for a deal, and therefore the properties that were sent, and we can refine this over time, obviously, but the properties that we're sent broadly fit our criteria. So that's the first thing. I'd recommend you set up an email address for those alerts, and then have a set amount of time every week where you go through them, or every day, or however much time you've got, where you go through those deals, and you can kind of methodically work through them. So when I look at a asking price, so obviously some properties don't have an asking price. Some properties are priced on application. There could be various reasons for that. Number one, the vendor has said to the agent that they don't want to put an asking price because they want to see what offers they're going to get. That's one reason. Number two is that we're in a market where agents are just not quite clear how to price things. So again, they want the kind of market to decide on that. And number three, quite often kind of very expensive properties, in the multi-millions, the agents want to vet investors to make sure that they're serious before they kind of give the information on asking prices, etc. But if you call an agent, they should give you the information on what the broad brush guide price is for that particular investment. So we want to kind of work out, first of all, let's assume the property is vacant. We want to work out potentially what the rent might be on that property so that we can then work back to a capital value, because don't forget that agent's asking price is an asking price. What we mustn't do is just go, oh, I got 10% off asking price and therefore it's a great deal. That's not how it works. What we need to do is work out what we can afford and offer that price rather than, because agents asking prices can be very wrong. Clients and myself, we call agents, and no disrespect to agents because they're just doing their job. But if a vendor has basically said, look, I want a 5% yield on this, when actually the market price might be 7% yield, obviously that price is going to be really aggressive and it's not correct for what the market's going to pay. Now, somebody might pay it. And obviously it's always worth, if you're a vendor, kind of trying to see whether you can get the best price. But as a purchaser, what we mustn't do is kind of just assume that that's the correct price. We need to work out what we can afford to pay, and then obviously that is our offer. So sometimes we might be putting offers out substantially below asking prices, and that's all right. Sometimes I think if you haven't got a knot in your stomach when you're putting an offer out to an agent or a vendor, then you're doing something wrong. So definitely definitely make sure that you understand exactly what it's worth to you. And also, what it's worth to you might be worth less to you than others, or it might be worth more to you than others. So, for example, if you run an operational business, or if you just want to park your cash and you haven't found anything else that's suitable, you might be willing to pay a bit more. So obviously, again, it's horses for courses. But let's assume that the property on the portal is a vacant property, or the property that's been sent to you is a vacant property. So it hasn't got a tenant in place. And obviously a commercial property without a tenant, without a lease in place and without rent being paid is actually worth less than an occupied property. So the way a valuer would look at this is they would basically work out how long, looking at comparable evidence, they would work out what the rent will be when it eventually is let. They'll work out how much rent free might need to be given to get that property let, and they'll work out how long it might take to get that property let. And by doing that, they'll look at comparable evidence, they'll use their own knowledge, and they'll speak to local agents about that. They will call around and try and find that information out. So you should do exactly the same thing. So what I do straight away is I will go onto the rental section of, say, LoopNet or Property Link Estates Gazette, and I will try and find properties to let in that particular area. So before I've gone anywhere near the agent, I will then look at kind of similar properties locally and see what the asking rental prices are. And also, if you've got Searchland's Pro package, or you've got CoStar, or you've obviously got that niche knowledge and that kind of direct line to local agents, you'll be able to find out actual comparable evidence of rental evidence. You'll be able to find out how long properties took to get let. You'll be able to find out how long rent frees were. So obviously this is the benefit of niching. You've got that information anyway. But if you haven't got that information, going onto the to rent section of these commercial portals, you can then look at comparables. Obviously, they're not done deals, so you need to bear that in mind. But it'll give you a really good ballpark as to potentially what the rent might be. I then will go on to my PropTech. So PropTech is really, really useful here. I'll go on to Searchland or Nimbus, depending on who you use, Land Insight. There's lots of others. But you go in and you can then see the rateable value. And rateable value, it isn't accurate in terms of rent. Sometimes you might need to deduct a bit or add a bit. But you can kind of verify the rentals that you've looked against the rateable values, and you can kind of work that through. What the PropTech is also super useful for is that you can look at whether that property was sold recently, what it was last bought for. You can look at the planning use. You can look at whether it's had any planning applications. You can look at what, kind of where it's zoned. You can look at local plans. You can look at all kinds of stuff in the PropTech. So I would strongly recommend that you use that. And I do have, my clients do have discounts with, for example, Searchland, quite substantial discounts on that PropTech. So definitely take advantage of that if you possibly can, because they really are invaluable. What Searchland also has is comparable evidence from Estates Gazette on sold prices. So again, you can go into those sold deals and that is proper comparable evidence, because that's real life data of done deals. And you can then go in and work out kind of what the capital value was, what the yield was, and what the rental value was. So we come out of this and we're not totally sure what the rent's going to be, but we've got a pretty good idea. And then we'll do very similar exercise on properties for sale. We'll look at comparable evidence, and we will go onto our PropTech as well. We'll look at properties nearby, when they were sold, what they were sold for. We'll have a breakdown of areas through the rateable value. And we can then work out on a capital value per square foot, we can work out rental values per square foot. And so we're just forming our knowledge of the area. And, I do this exercise very frequently with clients. So, for example, if it's retail, what we'll also do is we'll go into maps and particulars. We'll look at whether, there's something to rent in the prime pitch at one rent, and we're slightly off pitch, so our rent needs to be lower. So you just start using a bit of experience, a bit of knowledge. What you can also do is you can look at the on the PropTech, you can look at the leases in place. So there may not be a lease, but there might be leases in place, and therefore, what's the rent being paid on that? When was it last renewed? You can download the leasehold data. And you can also find out who the freeholder is, and you can do some research on them as well. What you can also do, interestingly, if there is a tenant in place, you can actually download that tenant's leases elsewhere. So you can look at kind of what they're paying elsewhere. You can look at what kind of lease they'll accept. So if you're negotiating with brands or multi-unit occupiers, you can actually then you can actually work out what kind of lease they'll accept, and you can kind of cross-reference. So that's just a bit of an aside. So where we want to get to is, you'll note that we haven't even called commercial agents yet. What we want to get to is we want to get a really good picture of where the rental evidence is by using comparables, by using our own knowledge, and, kind of by looking at the various portals. And if things aren't on the portals because there isn't anything for rent or for sale, and you quite often find that in smaller towns, which is a good sign, by the way, if nothing's to let, because that means that potentially, as long as you've gone on all the sources, you've looked at the local agents' websites, etc., as long as you're sure that that's the case, that's a really good sign, because if nothing else is to let, it might mean that actually there could be some really good tenant demand. You can look at you can Google the addresses, you can kind of find out information that way. It's amazing what you can find out when you put your search criteria into internet search engines. So you've got a really good idea of potentially where the rent is, what the yield is as well, because of these capital value comparables, we're looking at rate per square foot, sale prices. We can also look in auctions at this point as well. We can look at, if you've got EIG auctions, you can also look at the sale prices of some of the auction stock in those kind of areas too. So we're just building up a picture. Now, of course, this isn't the final picture, far from it. What it is the starting point of us starting to get to know where the rent, the yield, and the capital value should be on that particular property.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So we've got this basic idea of where we want to be. Now, the next step is where relationships come in, because you then want to be, ideally you would have built relationships already with local agents who will know that particular market incredibly well. And obviously you need to seek out the best agents in that location, people who are doing deals all the time. Sometimes it's really obvious, like in some of my investing locations, there is literally one agent that deals with everything, and there's just nobody else gets a look in. In other locations, especially in slightly larger locations, there potentially are several agents that you need to kind of get to know. So that's definitely something for you to do and action when you first start out investing. So you then want to be calling the agent. Now, a mistake that a lot of people make when they call agents is that they will just go bang straight in, trying to find out information, kind of trying to kind of suck them dry for information. But actually, that's not how relationships work. Relationships obviously work on mutual trust, mutual collaboration, and nothing more so really than relationship with a commercial agent. And so don't be surprised if a commercial agent doesn't call you back. You need to be quite persistent. And then when you do speak to a commercial agent, you want to speak to the selling agent first. You need to be establishing your credibility. That is your first job when you speak to a commercial agent. And you want to be establishing your credibility. For example, I'm a cash buyer. I've got a substantial portfolio. Doesn't matter whether that's residential or commercial, by the way. And I want to, I'm looking to buy this. I'm looking for this type of property in this location. Make sure you speak the language. They will spot rookies a mile off if you don't speak the language. So don't be vague. Establish your credibility, especially your financial credibility. Make sure that, you're pleasant to deal with. You do what you say you're going to do. Make sure you follow up. All of this are basic traits that you need to be able to build great relationships. And definitely with commercial agents, that's what you need to do. And some agents will be really friendly and really helpful. Some agents won't, but you just need to persevere with those relationships. And sometimes, meeting agents in person on viewings, even socializing with agents, if you possibly can, is a great way of getting to know them and getting that trust. And of course, once you've bought a property through them, then that trust is established, as long as you were easy to deal with and you weren't too difficult. So when you've then established your credibility with a commercial agent, then you want to be asking them some questions. So, I see you've got this property to let in this particular location. I presume it's still available. And then obviously you won't be quite as blunt as this, but how did you get to the asking price? So that's a really nice question to ask. And then if you've done the reason I like to do my initial research, I go onto the different portals, I look at the rents, because rather than just sucking them dry for information, you can then go, I've kind of looked at this. I think probably the rent would be in the region of X. Do you think that sounds about right? And I think probably the capital value per square foot might be Y. And perhaps the yield of this, is that the kind of ballpark you're looking at? You can also ask why the vendor is selling, how long it's been on the market for, whether they know of any tenant interest, what kind of lease terms are getting agreed locally, and lots of different questions. But you want to be building up a picture with them, and then obviously culminating in, okay, great, I'd love to come and have a look at it. When are you doing viewings on this particular property? So lots of different questions to ask. And you can do this in a really chatty, conversational way. Please don't do it in a way where you're literally just hammering out the questions and not building rapport, because relationships are all about rapport, and you'll find a brick wall will be presented to you if you don't build that rapport with the agents. So you want to be speaking to the agent, build that rapport. Then you want to be trying to get a viewing in place. And obviously the information that they've given you, you need to take with a bit of a pinch of salt, because it's a selling agent, right? So sometimes they will be actually really honest, super helpful. Sometimes they will be slightly optimistic in terms of, I'm being kind here, in terms of what they're saying. So make sure you can kind of differentiate it. Then, of course, what you can do is you can speak to other agents that deal with the property in that location. The way to get them to speak to you is, I'll be looking for a letting agent for this. Can you talk me through your thoughts on this? So by now we're building up a really nice picture of who might take this space, what kind of lease terms they'd take it on, 1 year, 3 year, 5 year, 10 year, 15 year, what's it going to be? What's your likelihood of lease terms? Can you get full repairing, insuring leases? Obviously, if you've got asset management potential, so it could be that, it's a large unit and, can you split it up? Is there demand for the smaller unit? So you'll need to find that out. Can you convert the uppers either to other commercial uses or to residential? You'll be kind of working well, you know, if it's say a secondary office, can you carve the space up, etc. So you'll be kind of finding all this information out through the selling agent, through other local agents, and then you'll be doing a viewing. On the viewing, you want to be speaking to the commercial agent about the property, but also, you know, do you have anything else like this available? You know, I'm really keen to look at deals like this. You know, could you send me deals as soon as they come through? Do you ever do deals off market with clients? Could you put me on the list? And then make sure you follow up that kind of conversation later. And again, when you go and look at the property, you want to be looking at it with a pair of spectacles in terms of, you know, for example, if it's industrial, what's the eaves height? Is there a roller shutter door? Could you divide it up? How much outside space does it have in the yard? You know, is there parking available? What's the access road like? If it's retail, you know, is it in the prime pitch, secondary pitch, tertiary pitch? And you can tell that because, you know, the brands will be in the prime pitch and then it falls off relatively quickly. You know, is there any service area? Is there any kind of staff accommodation, ancillary accommodation? Could you split the unit up? Could you reconfigure it? Are there any alternative uses? And what we're looking to build up a picture of, we're looking to build up a picture of multiple exits. And that is the name of the game with commercial property, is working out multiple exits. You want to have plan A, but you also want plan B, C, D, E. So plan A, for example, could be just if the property was tenanted, keeping it tenanted with that existing tenant. Plan B might be extending their lease. Plan C might be subdividing the space when they leave, or kind of negotiating with them to leave early so you can subdivide the space because you can double the rents or whatever. Plan E might be a change of use or some development works or extension. Obviously, it's horses for courses depending on the type of property you're looking at. So, and then obviously we'll be doing our numbers based off that. So you'll be working out your numbers, and we have deal stackers at the Commercial Property Academy, but you know, you'll be working out kind of what asset you'll be costing and pricing each of your asset management strategies, and you'll be working out what the impact has on value. Because, you know, unless you're just literally wanting to get a return over a number of years and you know, maybe buying properties with a 15-20 year lease and just buying it for income, if you intend to force value through by doing asset management, then you want to be like costing each of those criteria and look at the impact of each of those on the capital value. That's what you want to be looking at. And then obviously you'll be looking at that in different scenarios. Can I refinance to get my money out? Can I keep that money in and have a lower loan to value? What's the difference for me? And obviously, if you're a SaaS investor as well, then, you know, kind of, do I want to hold that debt free, or do I want to bring a mortgage into my SaaS? You know, there's lots of different ways of doing it. And then really early on, you want to be speaking to your broker. You really want to be having a very early conversation. So Bond Finance, Callum Brooks sponsor this podcast. Callum is always happy. If you say that you've come through the podcast, Callum is always happy to have a conversation about A, your ability to get finance, but also B, kind of how a valuer would value the subject property, what kind of lenders are available for them. For the finance on that property. And that is a really important part of the process. And then you've got a choice as well, whether you get a valuation instructed up front. And obviously that will give you a really, really good idea of what to buy, what price to buy at, or you can do that, get an offer accepted, and then you can look at it that way. So we'll talk about putting offers out another time and how you structure offers. But I just wanted today to talk about the due diligence on properties and kind of where you go with that. So hopefully that was useful, and I look forward to catching up with you next time.